I would expect emerging markets to actually be surprising on the upside for people next year. The most exciting opportunities for us would be in sectors driven by consumer. So we're looking at healthcare, which is really starting from the bottom on private healthcare. We're looking at insurance. We're looking at retail. We're looking at other consumer-facing businesses such as media.
Digital space, I think the whole digital economy is reworking, and there's some tremendous opportunities if you back the right play. Within Southeast Asia will be no different. I think consumption will play a bigger part because the propensity to buy is greater as the middle class grows, and we have a very young population that's moving towards more disposable income.
We think that with the current government's plans about the borrowing rates, the debt structures, and the central banks controlling inflation, 2014 would be a good year for Turkey.
Biggest opportunities in 2014 for Mexico will be absolutely the oil industry because of the energetic reform, infrastructure, banking, and I do believe also tourism.
I think the big investment opportunities are in those regions which are underrated by markets today compared to their potential. For instance, some countries in Southern Europe which are coming out of the crisis with a stronger competitive position like Spain, or even in countries like Brazil, which has a lower growth path during the recent 2 or 3 years, and some miscommunication between the government and the private sector, but have a much stronger potential for growth.
It's remarkable how resilient the US has proved to be, and so I do believe that next year the US economy will still be probably one of the most attractive places to put money to work. But having said that, I come from Brazil, and I think the infrastructure investment opportunity in Brazil will be really quite unique because of the large amount of projects that will be offered at the same time all the way from railways to roads to ports to airports. So there will be a large number of opportunities, which is unusual due to the size and the timing. So that should represent an attractive investment opportunity.
Well, the key risk is change in government policy. When you think of just a global financial policy that seemed to be more or less coordinated in 2013, you still see a differential impact on various economies in Western Europe and US and emerging markets. And lack of coordination that could emerge next year would be a big one to watch out for. And that will have, again, differential impact of wherever you invest.
The major risk I see is we are having a lot of portfolio investments, and this is coming and going out easily, and this really influences the interest rates, also the foreign exchange. I mean, Turkey, most of the private sector have hard currency debts, while most of the revenues are Turkish lira. So this causes a major discrepancy between the FX if you are not hedged, and most of these are not hedged in the long run. So the major risk, I feel like, is the volatility of the interest rates and also the foreign exchange.
I think the biggest risk in 2014 is speculation. I think so much hot money has gone into non-assets, so to speak. And there's so much volatility in currencies, there's so much volatility in commodities. Real businesses suffer from this volatility, and I just hope that a lot of the speculation is taken out and that businesses have a stable environment to grow. But what scares me the most is volatility. One statement from Ben Bernanke made currencies just collapse in Southeast Asia.
Key risks today are related to the different cycles of economic and monetary policies in the globe. For instance, when the US might start tightening is a moment that some countries in the globe would have to start tightening as well, and would be in a different cycle on the other hand.
As you know, most of the emerging countries have been having a lot of inflow of liquidity, especially from the States, from the expansion, the QE3. So we are afraid that once the QE3 finish or it starts decreasing, maybe will be some outflows of money, and we can see a decrease in the exchange rate and some adjustment in the capital markets as well.
Well, the biggest surprise for investors would be if companies starting reinvesting money into real investment projects, into more M&A, more strategic M&A or more international M&A. What you've seen, the companies are generally healthy, distribute profits. You've actually seen a lot of buybacks and increase in dividends, but you have not seen this return to where the companies want to be in the next 5 or 7 or 10 years.
I'm beginning to hear more and more about Africa, and I think is there coming a point that Africa becomes relevant and becomes an important market?
You have an important demographic bonus in Mexico. You have a link with the States. 85% of our exports go to the States, and it seems that the United States is going again. And the structural reforms that have been taking place, I think they're going to make Mexico booming for the next years.
That could come from the US. Something which could surprise markets positively. Let's suppose if there is a good agreement in the US Congress next year about the fiscal side, or if the Fed shows that they can get out of the easing cycle on a smooth basis.
A lot of the emerging markets depend a lot on Chinese demand for commodities. So if China is able to maintain a growth of 7% or higher, again, that could be a very positive surprise or positive scenario for most people.